Hey traders, David Frost, My Strategic Forecast. You're here for another episode of Common Sense Market Analysis. Today is Wednesday, October 16, 2024. We're looking at a daily chart of the SPY or Spider, which is the proxy for the S&P 500. What do we have on that docket today? We had what's called a bounce back day following a down day. You had three options following yesterday's down day. You could have had follow through to the downside. We didn't get that. You could have had a flat day where they just basically didn't go anywhere. You didn't get that either. So you had a bounce back, or a DCB, as I like to call it in the Inside the Numbers commentary, a dead cat bounce situation. Now, it's not really a dead cat bounce situation. It's just another up day. Yesterday was just a down day. Yes, it was on an uptick in volume, but at the end of the day, it was just a down day. Without the follow through, we're not talking about the 20-period moving average. We're not talking about the most recent breakout area. We're not talking about any of that stuff. What we are talking about is the trend is your friend until the very end. That's what we're talking about. So do we have any material change in the S&P? No. The market's in an uptrend. The trend is your friend. The daily chart is strong, well above all the moving averages. We were just getting a little far from home base. Guess what happened over the last couple of days? The market came down, number one, and number two, the 20-period moving average, or home base, was creeping upward toward price. Remember what we say. The quote-unquote overbought condition, the one that you can't measure, price comes back down toward, not at necessarily, but toward the 20-period moving average, at the same time giving the 20-period moving average a chance to creep up to price. All of a sudden, you don't have so much of that air-quoted overbought condition. Funny how that works. And we've seen this work over and over and over again. But wait, there's more. Everything isn't roses in the garden necessarily. We'll get to that later. There's still a little bit of a canary-ish situation brewing out there. Why do I have the chart up of NVIDIA? Well, simply because I wanted to show you the 136.50, and those traders in the live room today will remember the 136.50. As NVIDIA was on the rise, the question comes up, where is the resistance? What is a target today in NVIDIA? 136.50 was that number. We have traders in the room, not just one, but a handful of traders in the room that are prone to take larger positions in NVIDIA. So I do the work diligently. Why am I bringing up a chart of silver? For the simple reason that silver bounced off a number that was provided, as did other markets and other numbers. I'm just pointing one out. It was 31.75, support number 2 in silver today. 31.75, the actual low was 31.755. Funny how that works too. How about the Qs? The Qs bounced off a number also found in our new automagical table inside the numbers. The Qs, 487.75. This is the new table with all these markets that are provided to inside the number members and live room members each and every day. This is a beta test, as you see. Some of these markets may disappear based on demand for them. If there's just a handful of traders, it's just going to be a simple amount of work versus time available. But nevertheless, the numbers work. 487.75 today in the Qs. And as you can see, low of day was exactly 487.57. How you doing? Speaking of inside the numbers, we have the commentary on the S&P. That begins early in the morning before the market even opens. So at 8:45 this morning, what's the scoop? What are we looking at? From a numbers perspective, you can pause the video and read the notes, go back to the chart and certainly double check the work. Now the early stuff doesn't really contain numbers anymore. It's just rhetoric. The numbers are on the table, but at 8:45, what we're saying is, hey, look, above the flat line, call it 479.80. That's the flat line. The door is open for the bulls to run up toward 581.21 to 581.90, which is both a target and overhead resistance. Read that slow. Pause the video. 581.21 was the place. Here's a 5-minute chart. Right of the vertical is today's activity. You can see where the arrow is pointing. The high print in the morning before they went higher later in the day, the high print in the morning is 581.15. That qualifies, and as I say in the live room or in the notes, it's in the orb of the give or take. Sometimes they come up short, other times they spike them through. We certainly had some participation in the live room on the short side, those that were willing to front run the number by a few pennies. The next number is the 581.90 later in the day. That's not the same. We're looking for the morning trade. But even when they went up and busted through the 581.21 over here after lunchtime, look where they went. They went to about halfway home. There's something to what we call in the live trading room the midpoint phenomenon. It's something that I teach. It's something that is prevalent and it works. Traders in the live room know exactly what I'm referring to. What you'll also find in the notes is we had a support area of 577.71. They never gave us a chance to buy that price. Once they got above the pivot and we identified a pivot after the opening bell today, 932, 579.35 is the pivot for now. Above the pivot, she's bullish. Below the pivot, she's bearish. Never really got down to a price we were willing to buy this morning. Other than the way it works is staying above the pivot is bullish. Came back for a retest, never got fully there, but took off from coming up short of a retest of the pivot. 579.35 was our pivot. Below, she's bearish. Above, the door is open for the flat line or more. And then as she begins to go, we know where she's going. 581.21 to 581.90 is overhead resistance and the target. Reiterating it. Pause the video, read the notes, go back to the chart, and double check the work. This is what you get each and every day from a commentary perspective. During the morning session, if you're an S&P trader, this is invaluable information. Then you come down and we have stocks on the move and we have our table of all the other markets. This whole thing is invaluable. The price of inside the numbers, I'm telling you right now, shortly, sooner than later, is going higher. I will not, and I repeat, not with an underline, raise the price for existing members. The new members are going to pay a different price once I raise the price. And it's as a result of this table. If I keep this table and the jury's still out, if I keep this table, the price is going up. It's worth a whole hell of a lot more than you're paying today. New members only. Existing members, you'll never have a price increase. Now, let's get to stocks on the move. We had 3 potentials on the board. It is earnings season. They will start to come fast and furious. Today, there was a total of 3, and 2 of them did not hit their entry objectives. CF and OMC did not, but we will take a look at Interactive Brokers, IBKR. And as you can see, IBKR was a bit of a rodeo situation today. This all happened in actually a matter of seconds. They opened it up, they flushed it, they ripped it right back, and we had traders that were picking it up in the zone. They didn't even have time to get nervous. It turned around immediately, gave them a rocket ride, went above 150. Some traders made oodles / a boatload of money today in IBKR by picking it up in the zone, and they ripped it back up in the other direction right above 150. Nice trade. What do we got going on over in Camp IWM? How about a market that's up 1.65% today, $3.67, against the SPY that was up 0.43%. So therefore, you had relative strength in Camp IWM. They got above this previous high over here, and now they're going to work on this pivot up here, and we go over to the weekly chart and we see what's going on, where this is not the all-time high, but once they get, if they can get above and close weekly above this breakdown candle high showing up at 228.63, there's another leg higher. I've got some resistance numbers up on the board. This is, I believe, found in the table that you see each and every day, just in preparation for when and if that does happen. And if they're not on the table now, they will be on an as-needed basis. The trend is up. The trend is your friend. What have we been saying? What has kept you out of trouble? That little jingle. The trend is your friend until your shit gets thrown out the window. Weekly chart, trend is up. Breakout from that triangle pattern. Daily chart, trend is up. S&P 500, daily chart, weekly chart, trend is up. Don't fight the Fed. Don't fight the trend. When she puts in a sign and or signal of a trend change, she, meaning any chart, any market, that at least gives you something to trade against. It doesn't guarantee you anything, but without those things anyway, and what they are, meaning there's several different trend change signals. They're taught in the course, Lazy E-mini Trader. Once you find one of those, you have something to trade against, which means if you're wrong, you can be wrong, what's called small and fast. That's a requirement in the trading business. Really, the next target for Camp IWM is this pivot high over here, 228.63. What about the folks down at the transportation department? 16,700 look familiar? It should be. We cited it as a target, a big up day for the transports. So we had number one, my favorite market leading indicator, Camp IWM. And then my second favorite market leading indicator, or the folks down at the transportation department, also known as Buttigieg's crew. They're up 315 points today, almost 2%. My favorite, A number one, canary in the coal mine. We had a rip-roaring rocket ride for Team Transports today. And by the way, when you zoom out, what exactly is, we don't need this line anymore, what exactly is the area around 16,700? It's this area here where you have some previous highs. Market's now testing the area of those previous highs. It was eating time off the clock in an uptrending situation to challenge those highs. You have another pivot back here. You have some stuff in here. We'll get to that another time. There's resistance areas above, but that's what was going on. This is the way the market works. When you take it one piece at a time, the light bulb tends to go off and say, oh yeah, I get it now. I understand what's going on. It's one step at a time. When you look at a chart from a weekly perspective and you say, oh yeah, that was pretty obvious when you look at it like that. But when you look at it from like a 2-hour chart and you say, well, wait a minute, that was just an absolute rodeo to get there. Yeah, on a 2-hour chart, it was a rodeo. On a weekly chart, it was just getting there. It's not telling you how it's going to get there or when it's going to get there, but in an uptrending situation, higher lows, breaking out above this trend line, the whole 9 yards, working on the trend line, not really getting rejected 1 time, 2 times, always bouncing back. The weekly chart was telling you the uptrend was intact. What about the Q people? So they ran a test at a 20-period moving average today? We already talked about the 487.75. We don't need to belabor that one. So you could see there the 20-period moving average. But here's an interesting one. So the transports are on a tear. IWM's on a tear. But the Qs were flat. They were up 6 cents. That's flat. Doesn't count. It's basically flat. So we have the reversal candle from yesterday, and we do not have a dead cat bounce situation. We have a test of the 20-period moving average. As long as she stays above, there's nothing wrong. But we're the umpire calling balls and strikes, and we're noticing what's going on in each individual market. We notice the ones that were uber bullish, but we also notice the ones that may be telling us a different story. If there's a divergence, one thing's for sure. Either the bullish markets are going to turn around and take heed to the ones that are telling us maybe there's a canary at hand, and we'll get to the smash mouth, meaning semi-space, in a moment, or the Qs and the semis are going to turn around and they're going to catch up to the other stuff on the upside. One of those two things will happen. It's a matter of which one. But divergences will always, and I repeat, always resolve themselves. So therefore, we're putting the Qs on the table as a puzzle piece in the never know camp. We're watching. And here's the XLF powering forward. We're not taking anything away from any of the bull markets. We're just watching based on a divergence that's occurring. But when you look at the financials, nothing wrong here, nothing to see here, just power forward, new highs, getting a little bit extended also from home base. What happens when they get a little bit extended from home base? They like to pull in a little bit. The financials have been on a tear. Goldman Sachs, JPM. We can take a look at a couple of the charts. Goldman Sachs had that reversal day yesterday. JPM had that nice trade that we had in there. We don't need this stuff anymore. They're challenging the former highs, but look at this tear higher from just around 205. Remember where we bought this thing? This is where they went to. This was a tremendous run for JPM. You don't expect to get that kind of a run that quickly out of JPM. That was one that was on the swing trade list. Now, what do we got going on over in Smashmouth, or the Philadelphia Semiconductor Index? We had the big down day yesterday on volume. This is a canary-ish situation. It's a canary for the tech space. You can also make the case that, hey, markets are broadening out. Money is shifting around, and therefore it's a bull market because markets are broadening out. That may happen. That may be the case. But anytime I see a divergence in the semi-space, I pay attention. It's a puzzle piece until deemed otherwise. I look at the volume yesterday. I look at the big down day yesterday, down about $14. And then I look at the lack of a dead cat bounce. Today was basically a flat day, up 16 cents. That's flat-ish. And for now, as long as she's holding the 20-period moving average, we'll give it a pass. But if she starts to break down the rest of the market, we have to watch out for follow-through or me too type of situations. Hey, by the way, have I told you how much I appreciate you? Without you, these videos are not possible. That is true and accurate information. We're pulling the ripcord here today. I'm David Frost, My Strategic Forecast. Thanks again for tuning in to another episode of Common Sense Market Analysis.